So initially, I wanted to talk about stablecoin, and I still do. I'm not sure if people understand stablecoin, but I want to talk about stablecoin, and I want to talk about what the United States is doing, and as far as getting into that space, and probably what other countries are doing. So we're going to use ChatGPT. We're going to go back and forth with ChatGPT, and we're going to unpack a few things. So let's get started. All right, ChatGPT, can you tell me about the Genius Act that the United States enacted this year?
Good news. Yes, you're talking about the full title, the Guiding and Establishing National Innovation for U.S. Stablecoins Act of 2025. I'll walk you through what it is, why it matters, and what some of the open questions are. What it is. The bill was passed by the U.S. Congress and signed into law on July 18, 2025. Congress.gov. It's aimed chiefly at payment stablecoins, digital assets pegged to a fixed monetary value, typically the U.S. dollar, and sets up the first comprehensive federal regulatory framework for these tokens in the U.S. SCADN. Key things it does. Only permitted payment stablecoin issuers may issue stablecoins in the U.S. Non-permitted issuers are prohibited. LW.com. It requires strong backing of reserves. Stablecoins must be backed with liquid assets, U.S. dollars, short-term U.S. treasuries, in order to maintain their fixed value. The White House gives regulators, federal or state depending on the issuer, oversight of the business of issuing and intermediating these stablecoins. It also tries to align state and federal regulation to avoid overly fragmented rules. The White House. Why it matters. For the crypto digital asset industry, it brings a huge piece of clarity. Up until now, stablecoin issuing was in a kind of patchwork regulatory zone. This brings a national standard. WeForum.org. For consumers and financial stability, the backing reserve requirements are intended to prevent a repeat of fiascos where stablecoins lose their peg and, by extension, trust. It's a guardrail for the system. For U.S. financial competitiveness, the U.S. wants to maintain or gain leadership in money innovation, digital payments, tokenization. One of the selling points of the Act is that it helps bring more stablecoin issuance and related business into U.S. jurisdiction. The White House. Some of the details worth knowing. Payment stablecoin is defined in the Act as a digital asset that, 1, is redeemable for a fixed monetary value, and 2, is represented by the issuer as maintaining a stable value relative to a fixed amount of monetary value. SCADN. Issuers fall into different buckets. For example, insured depository institutions, banks, or their subsidiaries, federally licensed non-bank issuers, or state-qualified issuers under certain thresholds. LW.com. The Act prohibits intermediaries from offering or selling a payment stablecoin to a person in the U.S. unless it was issued by a permitted issuer. Reserve backing has to be one-for-one and in safe liquid assets. The monthly disclosure of reserve composition is required. The White House. Open questions, critical points. State versus federal balance. Though the law sets a framework, states still have roles, and the transition from many state rules to a unified system will take shape over time. Scope limits. The law focuses specifically on payment stablecoins, other crypto assets. Governance tokens, securities like tokens, other kinds of digital assets are not comprehensively covered under this act.
All right, so now we've heard it from the AI. So we're going to go through this. All right, let's see. Here, only permitted payment stablecoin issuers may issue stablecoins in the U.S. Non-permitted issuers are prohibited. So there, right? Only permitted payment stablecoin issuers. Let's do this. Can you tell me who the stablecoin issuers in the United States who are permitted to issue stablecoins, whether it be banks or non-banks, who has the United States given permission to?
Good news. Yes, the Genius Act, Guiding and Establishing National Innovation for U.S. Stablecoins Act, signed July 18, 2025, lays out exactly who can issue U.S. dollar-pegged payment stablecoins in the U.S. and under what structure. Congress.gov. Here's a breakdown of who qualifies. But note, this is about eligibility, not a list of already approved issuers. As of now, there are no public lists of approved issuers under the framework. Eligible permitted stablecoin issuers. The law uses the term permitted payment stablecoin issuer, PPSI. Those fall into three main buckets. One, subsidiary of an insured depository institution. That means a bank or credit union whose parent is FDIC insured and which has been approved under the law for stablecoin issuance. Example, a bank's subsidiary issues the stablecoin under oversight of the bank regulator. 2. Federal Qualified Payment Stablecoin Issuer, non-bank path. A non-bank entity, fintech or crypto firm that is approved by the Office of the Comptroller of the Currency, OCC, to issue payment stablecoins. Congress.gov also includes uninsured national banks chartered by OCC or federal branches of foreign banks if approved. 3. State Qualified Payment Stablecoin Issuer, an issuer that is legally established under state law and approved by a state stablecoin regulator and meets the state regime that is substantially similar to federal standard and stays under some thresholds, e.g., smaller issuance size. LW.com. Key requirements for these issuers. They must back every outstanding stablecoin at least 1-1 with specified assets, cash, U.S. Treasury bills, notes, demand deposits at insured depository,
All right, so we don't need to go through that again. Let's just go to, all right, here. So, all right, so he goes on to say, well, ChatGPT goes on to say, the subsidiary of an insured depository institution. And this means a bank or credit union whose parent is FDIC insured. And we all know that FDI insured is insured up to, I think, like 100,000 of how much money you got in there, and which has been approved under the law for stablecoin issuance. And it says, example, a bank subsidiary issues the stablecoin, right? Subbed, like when we talk about subcontractors, I subbed out work. So a bank subbed out for stablecoin to be issued by someone else. And it says under oversight of the bank's regulator. It says a non-bank entity, fintech, or crypto firm. Now this is important. So crypto firms that are approved. Now there is no list yet, right? But a crypto firm that can be subbed or subcontracted under a bank to provide them with stable coins. So what should our next question be? I got one. So the crypto firm Tailcoin, Tailcoin, they just got something passed that in Nebraska they can operate as a bank. Is this correct?
Yes, your understanding is correct. Telcoin, via its banking charter subsidiary, has been granted a charter by the Nebraska Department of Banking and Finance to operate as a digital asset depository institution in Nebraska. Business Wire. Here are the key details and caveats about what that means. What the charter allows. The charter enables Telcoin to operate a regulated bank under Nebraska law that is purpose-built for digital assets and stablecoins. They're calling it Telcoin Digital Asset Bank. Business Wire. Under the charter, Telcoin intends to issue a stablecoin named EUSD, described as the first bank-issued on-chain U.S. dollar stablecoin. The charter also allows Telcoin to connect U.S. bank accounts to regulated digital cash stablecoins and to bridge traditional banking with blockchain rails. Business Wire. The charter is considered the first in the nation for a digital asset bank under this type of state framework. Important caveats. This is state-level charter approval, Nebraska, rather than a full federal bank charter. So while significant, it's subject to both state and possibly federal oversight. Operating as a bank here is in the context of a digital asset depository institution under Nebraska law. The Nebraska Financial Innovation Act provides the framework. Nebraska Governor's Office. Even though they're issuing a stablecoin, EUSD, and bridging to bank accounts, many regulatory requirements remain: reserves, transparency, stablecoin backing, compliant business operations before full commercial rollout. The charter is described in many sources as final approval, but in certain sources it is conditional approval, then final charter approval. Since this is a new regulatory model, actual implementation, what services are live, how broadly available they are, may still be upcoming.
All right. So clearly, at this point, we're talking about the Genius Act. All right. We are talking about the Genius Act. So we have such as Tailcoin, and that's at a state level. Let's see, where did we see? We were reading here, and here it is. An issuer that is legally established under state law and approved by a state stablecoin regulator. This is what Tailcoin falls under, right? As a permitted stablecoin issuer. Now, because the Genius Act has been enacted, clearly the first one we're seeing to come out and make that move, and this is at a state level, not federal, is Tailcoin. Um, what happens after that, I don't know. But do not think that this will be the only, let's get it again, fintech, right, or crypto firm that is going to come out in a state operating and such. So we have the United States, we have the Genius Act. We're watching the total crypto market, and we understand that business, so the crypto space is going to take off when more people are using it. Now, as of right now, we are collectors of assets because we know if we're holding early, when people onboard it, they're going to drive the price up for these assets because they're going to want to use them and need to use them. So, as an example, let's do this. Let's see if ChatGPT will understand. So, with stable coins, in your opinion or your information you can source, is it possible that the stable coins will be used for everyday people to go in and out of stores, everyday stores such as Walmarts and grocery stores, in the future or near future to buy or purchase their goods through their banks using stable coins?
Yes, it's quite plausible that stablecoins will become a common payment method in everyday settings, groceries, big box stores, etc., in the near future. And there are several trends and signals pointing strongly in that direction. Why this seems likely. Research by FIS Global shows that banks view stablecoins as a primary candidate for peer-to-peer payments and online shopping, 45.1% and 44.3% of respondents respectively. So the underlying demand is there. FISGlobal.com. A report by suggests that stablecoins used in next-generation payment infrastructure could reach very high transaction volumes. They estimate daily transaction volumes of at least USD 250 billion within a few years, if adoption continues. McKinsey.com. Payment infrastructure companies, fintechs, and merchants are already integrating or piloting stablecoin support. For example, one article notes that merchants and brands are actively planning for stablecoin adoption in commerce, with infrastructure partners like PayPal, MasterCard, and payment rails to handle stablecoins. Regulatory frameworks are advancing, like the US for stablecoins, which removes one major barrier to mainstream adoption, Genius Act for stablecoins, which removes one major barrier to mainstream adoption. If stablecoin issuers are properly regulated under the law, merchants and banks will feel safer accepting them. Important caveats and hurdles. Even though infrastructure is advancing, merchant integration at scale, grocery checkout, big box stores, etc., is still early. The article from Politico points out that only 2% of US adults were using crypto for payments at the moment of writing, So there's a significant gap. Stability backing regulation. For widespread use, stablecoins need to be very reliable, peg stability, redeemability, regulation. If a stablecoin fails the backing test or regulatory environment is unclear, merchants will hesitate. Wallets, consumer behavior, UX. For everyday retail use, you need a frictionless wallet, payment rails, regulatory compliance, and consumer familiarity. That takes time. The article says transforming behavior from cards, cash to stablecoins will take a while. Merchant cost and infrastructure. Accepting stablecoins means merchant terminals, settlement systems, accounting, tax finance adjustments. Big retailers will move when the business case is clear. Fees, settlement speed, risk. The regulatory environment in the US is still catching up in areas like tax, KYC, AML, stablecoin regulation, even with the Genius Act, so risks remain.
All right. So clearly, the setup is for um, instantaneous shopping and payment. Um, we can speculate, but there's no point. The fact would remain that you can cut out a lot of middlemen, and you can take direct payment. How does that work? You just need a wallet. You look at Coinbase. Coinbase has a wallet. Coinbase brings in assets at large scale. Then those assets, we can purchase from them off their wallet to our wallets. We just buy it and bring it over in our wallet, and then boom, we're good. And that's what you do in an exchange anyway. You bring it from theirs to yours, and it's yours. Now, technically, they can keep yours there. They keep it separate because, you'll have a memo, and the memo is basically, hey, inside of our office building, there is a room. The number is XYZ, and this is where so and so's holdings of, let's say, XLM are in this storage room. All right. And then that's how they keep track of things. So technically, you're insured to a degree with certain exchanges, the likes of Coinbase, because they've always already been through the rigors of scams and all that stuff. So they've pretty much built up a strong system through the early stages, and they're getting good at what they do. Now, back to the stablecoin. So we know that banks, businesses, industries, they need this. We know that it's going to be used, but like they said, only 2% of the population in the United States as a whole is using this technology. Now, and I'll use Telcoin for an example. They've set up a system where they work with the phone providers. So if you have, for instance, the Telcoin app, it uses your phone number when you set all this stuff up, and then you can connect your contact information from your phone to Telcoin. And then if any of the contacts in your phone use Telcoin, then you'll literally pull the contact up in your wallet and you'll send them the stablecoin amount that you want to send them. And then, wow, boom, look how easy that is. Now, the other feature would be these wallets, one, have to be able to make it easy for you to send money, right? Because right now, with most wallets, you've got to scan, right? Or have somebody text you their address, their wallet address, which means they have to know how to copy it from their wallet and then paste it in the text message to you. So then you can therefore copy it and then paste it to the sender's address in your wallet. Now, a lot of us in the crypto space think that's very simple in comparison to the earlier days. Like, you had to double check and you'd send like 5-10 cents, in the earlier days of this technology. But it's getting so easy now that, we'll just copy it, paste it, and send it off. Goes to the next wallet. So it's getting easier, but even in that, it's not easy. Your common person will stumble on doing something as simple as that. Well, I think it's simple. It's not necessarily simple, but with that, they have to make it easy. So if you open up the wallet, then you have to. Let's do this. Do you know with Cash App, if somebody tells you their Cash App, right, their Cash App name, and you start typing it in, right, or you type in their contact name, right, like for instance in the phone, I start typing in a name in the Cash App spot or whatever, and it'll bring me up. Oh, this contact has a Cash App address, and boom, here it is. Right. That's the simplicity that the wallets have to be on. Now, obviously, they can do it because Cash App has that tech, which means that Telcoin is in the right direction by working with telecom, right? Working with the phone service providers. So that's got them in the forefront. Who else is going to follow suit? So now that they're going to release their stuff and operate as of December 1st, they're going to start moving around and helping banks do it, right? So we can see now that closing out this year, going into the next year, it might be the first quarter of the year, we'll probably see more providers or banks now being able to integrate in this simplified version so that we can begin, right? So then here's our next question. So if we don't have much of anybody as of right now, we've got one crypto, which is Telcoin, that's in the space that we know. Well, let's ask this question. Are there any other crypto providers that operate like Tailcoin as far as the Genius Act having the ability to actually provide the digital assets?
Yes, there are several crypto and fintech firms positioning themselves under the Genius Act framework or moving toward it to become permitted payment stablecoin issuers, PPSIs, in the US. Here's a breakdown of some of the key players and how far along they are. Notable firms pursuing this pathway: issuer of the stablecoin PYUSD. In partnership with, they have applied for a national trust bank charter from the OCC. Reuters.com, issuer of USC, a widely used US dollar stablecoin. They filed for a federal bank charter or trust bank, which would put them in the federal path under the act. CogentLaw.com, issuer of the RLUSD stablecoin. They have applied for a national bank charter, aiming for federal path compliance. Reuters, Anchorage Digital Bank, NA, a federally chartered crypto bank or applying that claims to be offering white label, federally regulated stablecoin issuance service designed to meet the Genius Act framework. Anchorage.Telcoin Digital Asset Bank. As you noted, in Nebraska, they received charter approval under a state law, Nebraska's Digital Asset Depository Institution, to issue a bank-issued, on-chain US dollar stablecoin, EUSD. While that's a state route, it still aligns with state-qualified issuer path under the Act. Important real-world caveats: what positioning means. Application to approval. Many of these firms have applied for charters or regulatory status. Being fully approved and operating as a PPSI under the Genius Act is a separate follow-through step. State versus federal route. Some firms are pursuing charters under state frameworks like Telcoin in Nebraska, which may qualify under the State Qualified Payment Stablecoin Issuer SQPSI path of the Act. Others are going federal, FQPSI path via OCC. Compliance requirements matter. The Act requires one-to-one backing, disclosures, audits, AML KYC compliance, etc. A firm might be positioning, but still needs to meet those operational regulatory standards. Market and regulatory timing. The
Let's hold there. I can't tell if I heard that correctly, so let's scroll down and see if we can find it. Um, Notable firms pursuing. Paxos, trust company issuer of the stablecoin PYUSD, in partnership with PayPal Holdings. Obviously, PayPal, right? Because PayPal's been in this space forever. So the PayPal coin under Paxos Trust Company is going to be operating under the Genius Act. They're applying to get that done. Circle. Why? Why would we not know Circle's USDC, which we commonly find on Coinbase, right? A widely used US dollar stablecoin. Widely used, of course. They filed for a federal bank charter or trust bank, which would put them in the federal path under the act. So PayPal, Coinbase, USDC, right? There's Circle, but we know Circle's Coinbase. And Ripple Labs, issuer of the RLUSD stablecoin. They have applied for a national bank charter, aiming for federal path compliance. Obviously, right? Ripple, who has XRP's rails, because that's how they're going to flow RLUSD, the stablecoin, it will run on their rails. Anchorage Digital Bank, a federally chartered crypto bank, or applying, that claims to be offering a white label, federally regulated stablecoin. Anchorage Digital Bank. I'm not familiar with them, so I don't know much about that. And then there's Tailcoin, obviously. So we've been talking about Tailcoin. So let's just get it straight. So Paxos, they have the PYUSD. This is PayPal. Circle, which we know Coinbase, has USDC clearly. Ripple, which is the XRP ledger system, has RLUSD. Those two, well, those three, well, four, because I don't know Anchorage. But those four are looking to go federal. And then we have Tailcoin operating on a state level right now. Right now. That's what we got right now. So, now the other question would be, are there any banks that are getting subsidiaries to work with them to provide stable coins through the Genius Act?
I couldn't locate public confirmed evidence of a bank plus subsidiary setup that's already approved under the for stablecoin issuance. But there are banks and crypto firms actively positioning for exactly that. So you're on the right track asking this question. Let's break it down. What the Genius Act allows. Under the Act, one of the three paths for a permitted payment stablecoin issuer, PPSI, is a subsidiary of an insured depository institution, i.e., a bank, that is approved to issue payment stablecoins. DACFP.com. The law therefore implicitly anticipates banks or their bank subsidiaries entering the stablecoin issuance space. Who's positioning? Circle Internet Group, issuer of USDC, has applied for a national trust bank charter, which could be a banking entity, potentially serving as or alongside as a subsidiary of an insured bank, in line with the regulatory path under Genius. Barron's.com. Other crypto firms are applying for charters or bank-like entities, trust banks. This suggests that banks and bank-adjacent entities are gearing up for the bank subsidiary path. Why none are publicly confirmed yet? The regulatory rules under the Genius Act are still being finalized. Agencies like the Office of the Comptroller of the Currency, OCC, Federal Deposit Insurance Corporation, FDIC, and the U.S. Department of the Treasury are drafting the specific regulatory approval processes. Mayor Brown, applying for a charter or bank subsidiary status is a first step. Approval as a PPSI under the Genius Act is a separate step. And I did not find a publicly announced bank subsidiary that has completed that full path yet.
All right, so technically new, right? All right. So again, Circle, right? So the traditional banks, are not involved in this. They're not. And I just asked it. are the traditional banks. Like they're not. They're not. They're not involved in this. What we found is PayPal, which is operating through Paxos Trust. We found Circle, which we know is tied to Coinbase. We found Ripple, which we know has made its uh, monies or liquidity from its XRP ledger or XRP rails. And Tailcoin, who has been creating its liquidity and working at a state level. But banks are not brick and mortars. These banks, Bank of America, come on, think of these banks. Banks. It's not showing that they're making any real steps. So I would question. Okay, let's do this. If fintechs and crypto companies take over through the Genius Act, what does it look like for the traditional bank?
That's a sharp and timely question. If fintechs and crypto companies become dominant stablecoin issuers under the Genius Act, here's what the future could realistically look like for traditional banks. This is based on what's unfolding now and how the financial system tends to adapt under pressure. 1. Banks won't disappear, they'll be forced to adapt. Traditional banks are still chartered institutions with deep regulatory roots, access to the Federal Reserve, and they guard the payment system. But if stablecoins become mainstream for retail and business payments, and fintechs dominate issuance, banks will be pressured to build their own stablecoin infrastructure or partner with fintechs, potentially lose transaction fee revenue since stablecoin transactions can bypass some card ACH fees, risk becoming back-end providers just holding deposits, while user-facing functions shift to fintech wallets or crypto apps. So the balance of power would shift from banks controlling both infrastructure plus user experience to just supporting infrastructure, unless they move fast. 2. They'll need to compete or collaborate. To stay relevant, banks will either launch their own stablecoins via subsidiaries or direct PPSI status, e.g. JP Morgan already has JPM Coin internally, acquire or invest in fintechs that hold Genius-approved status, form consortia like bank-owned networks to issue bank-compliant stablecoins under strict regulation. Some banks might also lobby regulators to limit non-bank access or demand tougher compliance, especially on AML, systemic risk. 3. They might lose consumer mindshare when if you, as a consumer or business, can hold a fully USD-backed stablecoin in a regulated fintech app that pays you yield, lets you shop at Walmart, pay taxes, and move money globally, why would you log into a clunky bank account? Banks risk becoming invisible unless they upgrade their tech and interfaces, offer embedded financial experiences, integrate crypto stablecoin services natively, wallets, swaps, staking, etc. 4. Regulatory insulation is their current advantage. Banks are still trusted by regulators, so if a fintech stablecoin issuer, even if Genius approved, suffers a DPEG hack or fraud scandal, regulators may favor banks again for issuance. Also, banks can still tap the Fed for liquidity and clearing. Most fintechs can't. So in moments of financial stress, banks may look more safe and stable than upstart issuers.
So, final question. Is it the Genius Act has created a door that literally can end banks based on how its planned interaction with cryptos via stable coins come into play for the American citizen?
That's the right final question. And the honest answer is the Genius Act didn't end banks, but it absolutely opened the door to a world where banks could be sidelined if they don't adapt. Let me explain clearly. Hash the door it opened. The Genius Act legally authorizes non-banks, fintechs, crypto companies, even state-chartered startups to issue US dollar stablecoins so long as they follow the rules, one-to-one reserves, no interest to holders, transparent operations, etc. This is the first time in US law that digital dollar money not created by banks or the government is being treated like real currency. That's the door. Why it could end traditional banking as we know it. If stablecoins become mainstream payment tools used at Walmart, Amazon, rent, utilities, etc., bankless banking, earn, spend, lend, borrow, all from a wallet, not a bank. Then Americans and businesses will begin opting out of traditional bank accounts and bypassing the banking system entirely. That doesn't kill the bank, but it weakens the bank's monopoly on money. But here's the deeper truth: banks don't die from competition, they die from irrelevance. If a fintech offers a faster, cheaper, safer, fully legal way to do what a bank does, and if the US government recognizes it under law, as the Genius Act just did, then the clock starts ticking on old banking. Unless banks evolve by issuing their own stablecoins, building wallet tech, or embedding themselves in fintech ecosystems, the American public might simply stop needing them. Final word. So, yes, the Genius Act is a legal pivot point, not a guillotine, but a gateway. Whether banks walk through it or get left behind is up to them.
All right. So I think the understanding here is um, the United States government enacted the Genius Act. It is forcing the hands of banks to basically comply or get left behind. It has opened up the doorway for the crypto space to come in and handle business. So when we talk about the Fed, the Treasury, and stuff like that, they're not going to be printing money per se. Um, but, well, yes and no. Using the security bonds and the dollars one to one allows, these firms or fintechs or crypto companies to work hand in hand with the federal as well as the state to produce these the digital cash, the stable coin for use within the United States. So just looking at that, you just saw it, right? You just saw it. If you want to know um, about PayPal, go look up Paxos. You want to know about USDC? Well, USDC runs on Ethereum's network, Solana's network, Stellar Lumen's network. Um, you want to know about RLUSD that runs on the XRP ledger. Tailcoin runs on, yes, Ethereum's network, and it also runs on, um, what is the other one? Oh my goodness. Well, I'm looking at it in my head mentally, and I can't grab it. Um, hmm, it has a second layer that it can run on for faster transactions, but they're trying to become their own first layer, I believe. So, I don't know how that's going to pan out. We got to keep up with that. Um, what is it? Oh my goodness, y'all know it. Y'all know it. It's stuck in my head and I can't get it because there's so much information. But either way, the stable coins is going to be the play because that's why they created the Genius Act. So to know where to position yourself, I think it's here in front of you. You can look at Paxos, you can look at Circles, USDC, you can look at Ripple, you can look at Tailcoin. Take any one of those. If you want to position yourself, you can look at Circle, you can look at Ethereum, you can look at Solana, you can look at Stellar Lumens, and anybody that's going to carry USDC, the stablecoin. If you're going to carry it, you're going to have to get it to run on your rails, which means you're going to need so your coin is going to run it. So, for instance, let's just say let's use Tron. If well, Tron, we're going to use them there, another country. Let's use uh, Stronghold SHX. So let's say because Stronghold operates US, right? So let's say Stronghold wants to get into the USDC space like Stellar Lumens. Then they would set up to run that stablecoin on their rails. So that would mean hey, holding, no, because that's already operating through Stellar Lumens. Because if you go to the Lobster wallet, it's all the same. SHX runs on Stellar Lumens. So when you trade it in, it's just like Ethereum, right? So let's not use Stronghold. Let's use Algorand, right? So if Algorand, which is its own network, wants to run the stablecoin USDC, then holding Algorand, you'll take Algorand, convert it into USDC, so you can run USDC through systems. But the only ones that are set up to do this is Paxos, Circle, RLUSD, or Ripple, excuse me, Ripple. Um, I don't know Anchorage. I know nothing about them. And then Tailcoin. Tailcoin's set up to run stablecoin in the United States. Okay, they got the E something something. Ripple, it has RLUSD. You're going to need um, XRP tokens to convert into RLUSD. All right, that's just how it works. You'll buy XRP, or you'll buy RLUSD, which is still essentially buying XRP to run it down those rails. And then it'll run down those rails, and that's how you'll do those transactions in the stablecoin. With Circle, you have the potential to buy USDC via Ethereum. You can buy USDC through a Solana wallet using Solana. And it just means that you get on your Solana wallet, you hook it to your bank, and then you'll say, okay, I want to buy $100 worth of USDC on Solana's network, and now I bring that into my wallet. And if you go to an exchange, you'll buy USDC. If your exchange has like some exchanges at times, you'll see when you go, I'm going to send, for instance, this, it'll ask you, well, okay, well, which network? And then you'll send it, from, I don't know, Solana's network, Ethereum's network, or Stellar Lumens network, right? But if you have, for instance, with Stellar Lumens, the LOBSTER wallet, then what you'll do is you'll take your Stellar Lumens in that wallet, you'll buy USDC, and you'll say, okay, I want $100 of USDC. And then anybody using that wallet, it doesn't have to use that wallet, but they have to be using a Stellar Lumens wallet, right? And then I'll just send them USDC down those rails. Now, there, for the common person, yes, it's not that easy for them to use it. It would take time, practice using that technology. This is why it has to be simplified. And so as you look at it, PayPal will probably do that behind the scenes. Circle, they'll probably set up technology that'll simplify it. Now, as of right now, they have what's their wallet called? They changed the name of their wallet. The Base wallet. All right. So what Circle or Coinbase did is they turn their wallet into what they call Base, and Base is a layer of Ethereum, and it moves just as fast as XRP, and it's just as cheap. So if I wanted to buy USDC on Coinbase, I could send it straight to the wallet, my Base wallet, in 1, 2, 3, and my transaction fee would be pretty much nothing. I could actually go to the Base wallet, and if I so choose, connect it to my Coinbase account, and then buy USDC base version. And then this is where the fast transactions come in. So now, when we look at what Circle has done with USDC, they have essentially made themselves able to compete with Ripple's setup with XRP. Now, I'm not sure about PayPal and Paxos, the PYUSD. Never tried it, never dealt with it. I can't tell you. Tailcoin is a very fast transactor as well, and they're positioning themselves. And I don't know anything about Anchorage. But if you want to position yourself, you now know there's Paxos, Circle, which we know is tied to USDC. Ripples are LUSDC. which we know is XRP, Tailcoin, and Anchorage. So figure it out. Figure out what you're going to do. Figure out how to position yourself to benefit from this, right? People are going to want to have access to this because it's coming whether they want it or not. The banks are not setting up for it because they're going to sub this stuff out, right? And then they're coming in late because they're waiting for regulation. So they're, if they try to create their own, say for instance JP Morgan, right? Well, who trusts banks? Well, people do trust banks. So the banks still can position themselves. But for uh, early starters that know, I mean, well, let's say this. Your banks are probably going to still go to people like Circle. They'll probably deal with these big players like Paxos because they're going to become the big players. They're the head right now. Ripple is a big player. Whether you want to acknowledge that or not, in the space that it's a big player. Circle, a big player. Paxos, I'm assuming, I don't know, but I think they must be a big player. Anchorage, don't know nothing about them. But if these become big players, then it's going to be easy for the banks to attach themselves to these big players and operate through them. Now, the banks will be able, because the common person is not going to want to deal in keeping up with wallets and security codes and all this stuff. Not going to do it. It's too complicated. You look at what Tailcoin is doing on the state level with banks. They're simplifying the technology. So not Coinbase, Circle is going to make things easy for banks. Hey, look, this is the plan. This is how we do it. Boom, here's the tech. Put your name on it. Boom, you're just going to pay us a fee, which means that as Coinbase, a company, right, or even Circle can create themselves a stock market position where, because they're going to become, well, they are fintech, right? And so, yes, they can position themselves to be something you eventually see on the stock market. Same thing with Ripple. They're going to position themselves. You're probably going to see them on the stock market traded. And of course, that's going to end up on the blockchain anyway. But as they position themselves, you're going to see banks paying a fee, right? And then the banks themselves are going to be a layer of defense, and they're going to keep the technology and apps efficient, updated, and working for their customers, which means their customers are going to pay for the benefit of the security and protection of their accounts, because your common person does not want to get involved in creating wallets, keeping addresses, doing secure transfers. They're not going to do that. You're probably going to see the common person have in their app a barcode reader, which they probably won't use no time soon. And then they'll have their normal card. And the transactions, like we talked about before, will probably run behind the scenes and the common person won't see it. They'll just slide their card, tap their card. Transaction will happen because the banks themselves are dealing with the exchange of currency with the likes of Paxos, Circle, Ripple, Anchorage, Tailcoin, and anybody else that might jump into the arena. Long-winded video. I'm going to do some editing and try to chop it down. I hope you guys got some value out of it. Catch you in the next one.